That you've answered it, because question one has to be passed. Now, question one in mathematical literacy, we expect and we predict that it will have finance and data handling. These questions will be mixed up. All right. Question two, it's finance. Then question three, data handling. Then question 4 and 5, now it goes back to integrated, which simply means it will be mixed finance and data handling. Now, another thing is that when we say integrated in context, now this one will be a little bit advanced, a little bit, but not as easy as question one, but it still to be under the same concept of question one, which says both finance and data handling in question one. Take note of that. Question one, we have both. This is what we expect in question one. You see that? Question two, we expect finance. Question three, we expect data handling. Question four, this takes you back to question one, integrated. When you look at integrated, it means you have concepts of data handling and finance in the same question. All right. Concepts of finance and data handling in the same question. Question two, finance, data handling. All right. Yes, the growth chart, this is the BMI. We shall see it here and there, including the data, the measures of spread in data handling. Now, when you look at measures of spread, we shall be looking at measures of spread. You look at your quartiles, you look at your range, and you look at your interquartile. Then I'm asking, or including the chart growth, application of measures. And now when you look at measures, because from the chart growth, we get what we call what? We get what we call the percentiles. You understand? So why do we look at quartiles in percentiles? Because, you know, Q1 is 50% or the 50th percentile. Sorry, Q1 is the 25th percentile. Q2 is the 50th percentile. Q3, 75th percentile. We get this from the growth chart. You're right. Probability will be there, but there's small context. All right, finance. When we look at finance, this is what we expect you to come knowing. Under finance, we expect you to come knowing this, or you will be expected to know this. The financial documents and tariff system. We've seen this already. Financial documents, we look at the household documents, whereby we look at the bills, the electricity bill. We can also look at someone's bank statement, the financial document, bank statement. Then we shall also look at this shopping list, or the till slip. Then we shall look at we expect you to know VAT, which will be here. Here we have UIF, VAT. Then the pay as you earn, the personal tax, this one here, if you remember it very well, the taxation that we go into. All right. Then tariff system, you've seen them. Still, we have water. We have the electricity one. We have the call options, or the, you know, it might be also photocopying papers, and you look at how to compare option 1 to option 2 or option 3, which option will have more, which option will be cheaper. You understand that? And then we shall look at income and expenditure, whereby we have profit and loss, surplus and deficit. All right, income and expenditure statements. Those ones shall draw them like that. One side you have income, and the other side you have what? Expense. It's more like a budget. You understand? More like a budget. Then cost price and selling price. The CP versus SP. You understand? Whereby we say profit will always equal to selling price minus cost price. You remember that? Or profit as a percentage. Profit as a percentage will always be selling price minus cost price divided by cost price times 100. Or we also use this for, we shall also use it for percentage change. Percentage change. We shall use it for percentage change. As time goes on, we shall see break-even point. Break-even point. Come to an exam and you know break-even point. How do we tell the break-even point? It's a point where income will always equal to expenditure or expense. The same money you put in, the same money you take out, or the same money that goes out. You understand? Income equals to expenditure. Take note, there is no loss, no profit at break-even point. At break-even point, there's no loss, there's no profit. You understand? Break-even point, there's no loss, there's no profit. Then we shall look at also we look at 5.5, which is the interest, bank loans and investments. These ones we've seen them already. The loans which we looked at the home loan, whereby we take the monthly repayment, we always equal to the loan amount divided by 1,000 times the factor. Monthly repayment, we looked at that. Investment, interest. We have what we call the compound interest and the simple interest. Compound interest and simple interest. All right, inflation. Inflation, the general increase. The general increase in prices of goods and services. The general increase in prices of goods and services. Still, you have to know this, that it will always be the current year minus the previous year divided by the previous year times 100. This is if you're looking for inflation rate. If you're looking for inflation rate, this is how we shall be doing it. I've already talked of taxation, where we expect to see UIF, VAT, the exchange rate, changing. Here we shall be changing one currency to another currency. You change one currency to another currency. You change one currency to another currency. Yes, this one leads us to data handling, whereby we look at classification, organizing, summarizing, and representation. Remember, they are, let me see, they have classify 1, 2, 3, 4. The fifth one is to create questions. When we look at data handling, please just know that data, we shall say data is a raw what? Raw facts. And data is split into two. It's either numeric or categoric. It's numeric or categoric. And again, numeric is also split into two. It's either discrete or continuous. Discrete or continuous. We shall look at that also. All right. Then another thing that we forgot, we looked about, we shall look at. It's called the first one to show the measures of spread. Then we have measures of central measures of central tendency. Measures of central tendency are three of them, whereby we have mean. I usually call them triple M, mode, and median. When is mean best representing data? When numbers are closer to each other. Mode, it's used when the data is categoric. When data is categoric, mode comes in. Then median, we use it when we have what we call the outlier. Outlier. This is when they are best in. All right. Representing data, we shall expect you to know the graphs that we are using. All right. The graphs, the pie charts, talk of box and the whiskers. No one will ask you to draw it, but you have to know how to interpret it. This diagram that looks like that. The 5-point summary, minimum. Then we have Q1, Q2, Q3, and we have the maximum. This you have to know how to interpret. Tell the difference between the bar graph and a histogram. You understand? Histogram used when the work is, when the data is continuous, and bar graph, it's good when the data is discrete. Pie charts, we use them when the data is in a form of as a whole, like it's a whole sector of data. You see that? That's how we shall see. Summarizing data, that's when we look at the measures of central tendencies, mean, mode, median, right? Organizing and classifying. Here we look at the frequency table. The frequency table. This is all data handling. A frequency table, that table of views that you draw with the tariffs. The frequency table comes here. All right. And this could be what you expect in paper one. But please, as you come, don't forget financial documents and tariff system, income, expenditure, profit or loss, income and expenditure statements. These you have to know how to interpret them. They might not tell you to draw. I know we drew it in grade 10, but in grade 12, we shall expect you to interpret it. All right. What does this, for example, the bank statement, the debit side, what does it carry? The credit side, what does it carry? You understand? The credit, it will always be coming in. Debit, this is money going out. So you always subtract on the debit side as we add on the credit, and this will call on to get what we call the balance. You together? The money comes in. If it comes in, let's say this is 300. Then, and previously here you had 700. The balance will become 1,000. So if this side we have 550 going out, so our balance here becomes 440. You know, that's how credit comes in, debit goes out.
What if God didn't? What if I had never been blessed beyond